Oh, very good afternoon, very good morning. Welcome to the FX Week Ahead live market analysis with myself, Giles Cochran. I do hope everybody's doing well. If you could just let me know that you can see my screen and hear my voice okay. Yeah, I'm good today, Aaron. Hope you're good too. Hope you all had a nice weekend. Had a nice weekend with a friend over from Shanghai, and it was just nice catching up with them and hearing about the difficult time they've had in Shanghai with all those COVID lockdowns. Obviously, a bit of a challenging time for them. Yeah, morning, Setley, Nahar, Omid. Just as other folks are coming into the webinar, don't forget, as we look at different entries, exits, this is all from an educational perspective. It isn't a signal trading service. For the topics we're looking at today, we'll be looking at the growth story for the US and also looking at Canadian jobs. Now, ideally, wanting to see a drop in Canadian jobs. If we see a big miss to the downside, we could see a sharp correction lower in the Canadian dollar. So that's definitely one to look for, particularly with the CAD Swiss franc pair. So keep that on our radars. Also, major aspects I'm going to introduce to us, so we're 100% on top of the major narratives, okay? With markets as they currently are, we need to stay in touch with the big stories. And we also just remind ourselves what's going on with metals, how they're signaling a warning sign. Looking at China 50, you know that we've been looking at buying that for quite a few weeks now, and that's sort of really heading up nicely into major levels. Dollar, we'll be looking at a potential stretch position of the dollar, and I'll just be running through what would potentially negate that, so you understand that's linked to the growth fears. And then obviously on Wednesday, we've got our workshop. Don't forget that happens on Wednesday. And when that workshop happens, we'll be running through the Canadian jobs, US ISM services print, and also we'll look at NFP as well. So that we're up to speed for that. And that's going to really tie into what's happening with the growth story. Now, remember with jobs data is a lagging indicator. In other words, if you think about it, by the time the labor market has been hit by a slowdown in the economy, it's because it's one of the last things to move. So let me give you an example. Say, you know, if you imagine a company, orders are down, then you might try and cut margins. Then you can see that costs have increased. You can see that profitability has been impacted. Maybe you're trying to economize. Can we, you know, cut back? And then eventually you'll reach a point when, oh, I've got to cut jobs. And obviously as a business owner, you know, the majority of business owners don't want to cut people's jobs. Of course not, because, you know, jobs is people's livelihoods, etc., etc. So jobs is a lagging indicator. It's one of the last things to move. So just bear that in mind. We're also taking another look at the yen. Keep your eyes open for the yen for potential intervention. I'll just remind ourselves what's going on with that. And the jobs data will be key for what's going on with the Canadian dollar. Okay, folks. Yeah, really good to have you all here. Also going to look at gold upside. There's a technical trade on gold to the upside, which I want to just run through with you. I'll just talk you through that now. I think we'll do that first of all, because it's a technical trade. And as long as there's no reason to expect gold downside, and what would push gold lower, and we said we had that big flush, this is what I'm saying, we had that big flush lower for gold on Friday. Now I'm long gold medium term, okay, from higher up, and I just have my stops underneath this 1780 level. So I'm still in the trade, nearly stopped out, but not quite. It's got my stop to the other side. There's also a big level down here, you see, so it's a little bit out of the way, you know, 1780 odd. So get myself nice and clear from that. But what we saw on Friday was a big technical reversal. Now, this is a lesson to learn. I do run a technical trading course. I've just been running that on a live $50,000 account. This is the sort of thing we've been looking at. And you can see here, this is a very technical reversal. You have the body of the candle, which is bullish close. Notice the close is within the body of the previous day candle. Notice the tail is long, and notice that there's lots of space to the left. Now, all of that is a technical reversal signal. Now, technically, you would anticipate a move from the nose of the candle, so in other words, from market, and you could potentially look at a move up to the next resistance level. Now, the next resistance level comes in here at this 1825 region. So basically, you'd expect a move from market up to 1825. Stop's going to be the other side of there. So from a technical perspective, as long as there's no fundamental reason for gold selling, and the reason for gold selling would be if we suddenly see a risk-off flush. And that's possible, you have to be aware of it. But as long as that's not happening, we don't see that dollar strength, we don't see a big bid come into bonds, then we'd expect a move from here at least to that 1825 region. Now, we're not expecting any more than that, because this is a purely technical trade, and we just expect a move from here up to 1825. You could get a stretch up to 1830. I would prefer a move up to 1825, just a little bit safer in terms of the technicals to support you there. So just be aware, that's a nice little technical trade. It is a trade I am in on a $50,000 account, so just to let you know that that's there. It doesn't mean it's going to work out, of course, but nevertheless, I like to point out these technical trades. We've got that euro pound. I can't remember if I pointed this out to us. I think I did last week. Again, I'm running this on a technical trading challenge and just sold at that 0.8670 region. There isn't particularly a trade here, although there is a technical break of this level. If we break out of 0.8594, break from the nose there, we have got a technical move down to that 0.8567 region. So you can reasonably expect a move from there down to 85, sort of 70. So you've got about, 22 points to the downside there from that level down to 85.70. Again, a little technical move. This is better because there is a fundamental bias, there's a growth differential between the Eurozone and the UK. So euro pound selling does make sense. And if you just look at the bond yield spread between German bonds and the UK gilts, right, you'll see that the bond yield spread does move. Oh, let me just get this. Let's see if I've got that. It's a bit better. There we go. We'll just put this bond yield spread, we'll put it into a nice format so we can see it nicely. You can see the bond yield spread sort of moving quite flat. So we would anticipate, price to continue to move lower, and at least another test of that 1870 region is what could be reasonably expected, just down to that 0.8570 region. And you see price trying to push lower from that supply area up high. So this was a couple of things I wanted to point out. Now I want to go and show you the big picture, what's really going on in markets, so that you've really got your head around the major drivers. Now, if we just take a look at equity futures markets, first thing to remember, it's US holiday. It's the 4th of July, Independence Day, big celebrations in the US. So expect thinner liquidity. Now, what that means in practice when you're trading is it means that you're either going to get very narrow ranges with very little movement, or you're going to get big movement. And if you get any significant breaking news over thinner liquidity days, you can see significant upside in markets. So just to be aware of that. In terms of equity futures markets, we're pretty much flat on the session. There is a couple of worries that's buzzing around the market. Number one is there's a new COVID flare-up in one of the manufacturing regions in China, the Yangtze Delta region. Now, obviously, if China's got this COVID zero policy, so it means they try to keep COVID infections down to zero by locking down huge cities. Shanghai, Beijing, they will really go all in to try to limit the spread of COVID in China. Now, if we see more of those lockdowns, that weighs on economic growth, economic expectations, and is negative for the region. Now, the 50 index, we've been looking at this for some time. I've pointed out on numerous occasions, technical breaks and move to the upside. We're expecting a move from around these levels here up into that big region there. You can see price again dropping, trying to push above that 14,500 region. We're in key support. Price has bounced back into support, trying to push higher. If we break through here, next stop up to that 15,350 region. That's what you want to be definitely looking for. And you can see that price would typically move up higher into that region from here is what we'd expect. Now, if we get further lockdowns, expect the 50 to potentially collapse lower. Any retracements down to this 1300, 13500 region remains excellent value. We got this very large weekly hammer reversal bar. When this was combined with the fundamentals, we were really looking for potential upside, and we have seen upside to that first trouble area, 14,500, and now heading to the next area of 15,500 as well. So I've been long for weeks in the China 50 index, and continuing my upside, looking for further gains in the 50. It does remain a buy on the dips, but remember the key narratives. If we start to see significant lockdowns starting up again in China, think of Beijing, Shanghai, we have seen a pullback of some of those restrictions. If they start to increase again, get more restrictions, more lockdowns, then we could see another move lower in the 50 index. So be aware of that. Also, be aware of the dollar. Now, the dollar, and you can see here, this is from CFTC positioning, and this is from our friends over at Financial Source, who we have a good relationship. I also work as an analyst for the Financial Source team. This is one of their excellent reports put together by Arno Venter, and you can just see the CFTC positioning for the dollar. Pushing above the one standard deviation, you can see that longs are towards the extended level where we have previously seen dollar weakness pullback. You know, we've hit the standard deviation, fallen, standard fallen, standard fallen, standard fallen, second fallen, first fallen. We're around the levels where we've seen retracements before. So we are sensitive to the dollar pulling back. Now, if you just take a look at the dollar, what's been driving the dollar has been worries about slowing growth. Now, one of the reasons the dollar finds buyers, and I'll just point this out to you, is the dollar does find buyers when you see risks of a global reaction, of a global slowdown. Now, this is the dollar smile theory. I'll just show it to you. It will help you understand how the dollar reacts. Now, the dollar doesn't only just react to slowing, to monetary policy. The dollar also reacts to a global slowdown, right? So when you see the risks of a US recession, that's increasing. Risks of a global slowdown, that's increasing. I'll show you that in the metal markets. You see the dollar appreciate. So what we're doing at the moment, we're balancing a tricky balance, because from a monetary policy perspective, what you can see is that expectations of more aggressive interest rate hikes have been paring back. And we've seen that in the Fed fund futures. If I just show you the Fed fund futures, let me just show you here. Hang on, let me find the right chart for you. And just make sure I get the right chart. Let me just find it for you. There we go. Sorry about that. Just closed it off. What you see here in the Fed fund futures, right? Here we go. You can see here, you see those Fed fund futures dropping off sharply. So that means if you go back to June, early June, markets were expecting the Fed to hike interest rates up to 4% by December 2023. That's now pulled down to 3.5%. In other words, what investors are doing is they're thinking, okay, growth is slowing, so the Fed may have to be far more, less aggressive on monetary policy. So that's why we're kind of expecting the dollar to pull back lower. But you see the dollar keeps gaining. And we're up at those sort of around a potential double top area. Gun to my head, I'm expecting the dollar to weaken. But if those recession fears grow, the dollar can keep gaining. I'm anticipating the dollar to weaken. I think Aussie US dollar upside makes sense ahead of the RBA meeting later on this evening. So that's what's going on there. The only other point to look at before we get into the calendar week, what's happening, is just looking at the yen. Now, the yen has been very, very weak for months. You can see here, going back to May 2022, we just see yen weakness, yen weakness, yen weakness. Now, weak yen is good for Japan's exports. It makes, the Japanese exports cheaper. So more competitive and like to see more demand, but it makes imports more expensive. And high oil prices also impact the yen. The yen weakens with higher oil prices, and you can see here, as oil prices gain, the yen weakens. Gaining oil prices, weakening yen, gaining oil prices, weakening yen. So high oil prices pressure the yen, moves in US 10-year yields pressure the yen. As 10-year yields move higher, that pressures the yen lower. So the Bank of Japan could intervene at any stage. So to be aware of being short the yen, the Bank of Japan might suddenly intervene in markets, and you suddenly see the yen strengthen. And so you could suddenly see some dollar yen downside. Just be aware of that. Okay, it's a risk. Now they may not do it, they may do. I can't be more specific than that, I'm sorry. But it's just something we have to be really, really aware of. Okay, now in terms of data that we've got coming up for this week, let's just check the key points so we're on top of everything. Yeah, Naha, euro yen sells make sense. Yeah, we've got slowing PMI data out of Europe with a couple of misses. Euro yen sells make sense, and maybe euro Australian dollar as well. Just watch out for the RBA later. And euro pounds. Obviously, I've been selling euro pound from last week. I like euro yen sells because if you suddenly get intervention into the yen, then the euro yen could really outperform. Just make sure you manage your risk, Naha. But in principle, you're, that's not a bad idea at all. I like it. Okay, just make sure you manage risk and use a sensible place to enter. So we've got a holiday coming up. Just a couple of things to note today. We've got that Swiss inflation rate high, 3.4%, up towards the maximum expectation. Now, remember the SNB's last decision? They hiked interest rates by 50 basis points. They surprised both economists and stir markets. I bought the Swiss franc rapidly on that and taken profit my positions. Now, any retracements back on the dollar Swiss franc from that swing makes sense. So any deep retracements, US dollar Swiss franc remains suitable to sell. I'm not selling from market because we've seen a lot of strength in the Swiss franc, okay? And this is nothing new. Yes, it's high inflation, no surprise though, we knew that, right? So it just remains a sell on rallies, US dollar Swiss franc. Got a holiday and then starting it properly tomorrow when we're back on Tuesday. Got the Chinese data coming out overnight. If that's high, that can lift China's 50 index. And if there's no other major sentiment, that can lift sentiment positively as well. Look out for the COVID stories, okay? If the COVID stories are really starting to grow, if there's more worries about lockdowns in those really strong industrial regions, that can offset any upside. I'm expecting that to be a good print. Got the RBA interest rate decision. They're expected to hike interest rates by 50 basis points. So anything higher than that will boost the Australian dollar. So look out for potential Australian New Zealand dollar gains if we see a surprise interest rate hike or a more aggressive pricing. I'll deal with that on Wednesday and we'll unpick what happened and how we can best interpret that. A couple of Bank of England speakers coming up on the Tuesday, Tenrea and Bailey. Nothing expected surprise from the Bank of England. They're wrestling the stagflation, so high inflation, low growth. Not expecting anything differently there. On the ECB front, we've got policy meeting minutes on the Tuesday. So look out for any details of fragmentation. Markets will be looking carefully at the fragmentation if there's any news on that. Anything that's new, anything that's positive, expect that to potentially boost the euro. Otherwise, if there's any negative about that fragmentation, we can see further euro selling, and also look out for German data. Okay, this German construction PMI could really weaken the euro pound. So if you see the German data coming in very slow, watch out for further selling on Wednesday. Another Bank of England speaker, Cunliffe, Pill, and US data on the afternoon of Wednesday. Now, we've been seeing some counter-cyclical reactions to the US dollar recently. Now, it's a bit tricky trading US data. So we have to watch for, if this is a really strong print, I'm not expecting that to boost the dollar. If it's a very weak print, you either see dollar weakness or you're going to see dollar strength, because the market has sometimes been responding cyclically and sometimes counter-cyclically. So I'm cautious about trading the dollar print. So basically, if it comes in below 53, you could see risk-off trading, basically. Do you see what I mean? Because what you can see is that the US can appreciate on risk of a US recession. So watch out that sometimes the dollar is responding positively to negative news. So the way for your trading is, it's fine to have a view, but just be aware, be prepared to reverse it. Okay. On the Thursday, we got more BOE speakers, ECB Lane. Look out for any news about fragmentation. In the evening, we've got Fed Waller and Fed Bullard speaking on the Fed. And then Friday, we've got big data points. We've got NFP and Canadian jobs data. Now, the best opportunity that I can see is if we get Canadian jobs data that comes in below market expectations. So if this is a big miss, that's probably one of the best opportunities for the week that I can see. If you just take a look at the positioning, you can see here, if you look at the CAD, do you see how the CAD is, there has been some more shorts increased as of last week, okay? So the biggest aggregate weekly change was the Canadian dollar shorts. So that does make a bearish development for the Canadian dollar, but I'm still expecting some of those longs to potentially unwind further. So the best opportunity we'll get in trading the CAD dollar is if we see this come in below minimum market expectations. If this comes in below 10,000 for the unemployment rate, if you get the unemployment rate above 5.2%, and if you get the full-time employment, dropping, and part-time employment dropping, and the participation rate lower, then look for CAD weakness. And I'd expect probably the best pair to trade CAD weakness would be like the CAD Swiss franc. So CAD Swiss franc shorts would be my favorite pair. Okay, so that's only if we get a miss. If you get a beat, no change. We've been seeing a lot of CAD strength really building over time. Okay, so now I'm expecting the CAD to unwind a bit, and the best opportunity for unwinding would be a big jobs miss. NFP, again, we have to watch the dollar's reaction. Now, my first port of call would be if we get a big miss on the data, I'd expect that to weaken the dollar. But I'm also aware of a counter-cyclical reaction to that. That if we saw a big miss, recessionary fears can mean the dollar finds buyers because people sell risk assets across the world, and what does everything get converted back into? Back into the US dollar. The world's largest market is the US. So when the world's worried, US investors are worried, and they bring dollars home. They sell assets across the world, and that helps to boost the dollar. So watch out for that. I am curious. We had two data points last week: US consumer confidence, and we saw some dollar strength on Friday. So I'm very nervous about trading the US dollar personally. I'm much more confident on the CAD. Okay, so that's my favorite. I'm going to stay aside from the dollar prints this week, most likely, and just focus on the Canadian data. So that's what I'm looking for this week. I've also got those technical trades that I've flagged up to us. That gold upside does look decent as a potential move up into that 1825 region. So that is suitable at market up to 1825. I don't mind that at all. I also quite like a potential euro pound short. Again, that's suitable from the break of that nose down to that 0.8576 region. So both of those look fairly attractive. On the euro Aussie dollar, we've got the RBA meeting coming up later on early Tuesday. So I wouldn't be adverse to selling from that pivot point, 1.5288, if we got up there today, okay, in anticipation of the RBA meeting. If we don't get there, I'm not going to chase it from here, because the time to have sold the euro Aussie dollar was last week. Noha, you've asked about the euro yen. Well, let's take a quick technical look at that, see if I can be helpful for you. We are seeing some support down there, so I wouldn't like selling it from that region. If we look on the weekly, let's have a look. Okay, we're seeing a little bit of tail. That's technically showing a little bit of resistance from that 144 level. We're still very bullish to the upside on that yen weakness on the monthly chart. The way I'd enter this euro yen, if this was me, I was looking to short it, what I'd look for, Nehar, is a big miss on the German data out on Wednesday. If we got a big miss on that German data on Wednesday, I'd look for a move and a break lower down through that trend line. If we break down through that trend line, I'd stay with it. Otherwise, I'd look at potentially selling from any retracements back up to that 14350, 144 region. We've got to move back up to there. Fine. The problem you've got with the yen is the yen has been weak for ages. And there was a trade, it was called the Widowmaker at one stage now, that people were expecting the Bank of Japan to stop buying bonds, okay? And people were expecting it for years and years and years. We're in a similar situation. We were expecting the Bank of Japan to stop defending this bond yield curve. Now, if you look at the bond yield curve on the Japanese 10-year yields, you see they've been keeping it flat at this 0.25 level, okay? That is Japan buying unlimited bonds. And unlike other bond markets, you've seen a huge sell-off in bonds, you haven't in Japan. That's because artificially supported by the Bank of Japan. Now, if they stop supporting it, the yen will strengthen. If they keep supporting it, it won't. So the problem you've got with the euro yen short is that you might find it keeps tracking higher despite the recent speculation. So that's the weakness with it. So I would take very technical entries. So I'd only sell from, say, like a move up to this 143 region, and I'd have my stops running above the high, or I go with a break of that trend line, and then if you get back above that trend line, exit. That's the way I'd use it. Now, the beauty of this trade is that if you do get the Bank of Japan intervening, then this could fall 400, 500 points. But, you know, it may not happen as well. So I hope some of that's at least helpful. Folks, don't forget, come back on Wednesday. We'll look at the RBA rate decision. I'll run through that. Look at the Aussie-New Zealand dollar pair. If we see a big shift in the RBA, very hawkish, then look for Aussie-New Zealand dollar buyers from tomorrow morning. You can look at that as a potential short-term trade, maybe trade up for a pivot point. That's the sort of thing I'll be looking for. Aside from that, we'll unpick if there's anything wider on the Wednesday topic. So don't forget, remind me if I forget, which if there's something big happening, I won't forget, I'll let us all know. Otherwise, medium term, dollar Swiss franc shorts make sense from deeper pullbacks, deeper rallies higher, and also that CAD Swiss franc could be a great trade on the Friday. Folks, we'll cover this again on Wednesday. Otherwise, take care. Good to see some good faces. Hey, Kingsley, good to have you here. Salvatore, great stuff. Setley, great to have you as well. Alejandro, CN, yeah, good. Ralph, Ignatius, great to have some good faces here. Take care, everyone, and look forward to being back here on Wednesday. And don't forget, do keep in touch with me on my Twitter. Keep an eye on my Twitter feed as well. With some of such good folks here, I will try and keep things up to date on my Twitter feed as well. All right, so it's at Giles Cochran CCA. You can follow me there. Look out, there's a few people that try to counterfeit me, but you should get a sense of me properly from this lot. Okay, folks, take care and have a good session. Thanks, everyone. Goodbye.